Good morning and welcome to Morning Markets. Today we're going to be focusing on the week ahead, a jam-packed week, and we're going to tell you why and what we'll be looking out for. This week, the US economy will certainly be in focus with a bulk of data coming through. If we think about the strength of the US economy, it's remained remarkably strong despite higher interest rates. On Wednesday, we'll get the latest reading on their economy with the GDP report, which is a measure of economic activity. So that will come through for the third quarter of this year. Expectations are for it to remain around where it was in Q2, around 3%, which is remarkably strong despite higher interest rates. More important perhaps for markets will be the more timelier economic data that comes out this week. Most important will be the US jobs report that comes out on Friday. The labour market has been remarkably strong. If we think about last month, we saw the number of jobs being added to the US economy far exceed what economists had been expecting. If we see that again this month, then that will certainly push out the hopes of interest rate cuts this year. Now, 140,000 jobs are expected to be added to the workforce in the month of October. It will likely see a bit of noise around the data given that we've seen hurricanes within the southeast, but it certainly will be a focus point for markets. Also important for markets will be the inflation report from the US. We'll get the preferred measure of inflation, or the Federal Reserve's preferred measure, known as PCE. Inflation has been trending much better this year and has given the confidence for the Federal Reserve to lower interest rates already. We're getting close to that 2% target. Expectations are for inflation to fall from 2.2% for headline inflation to 2.1%, whereas core inflation, which removes volatile aspects such as energy and food, that's expected to remain at 2.7%. Now, encouragingly, when we think about oil prices, a key component of the inflation basket, oil prices have remained remarkably stable. That's despite ongoing unrest within the Middle East, and we can see the oil price in the chart here. It remains below $70 a barrel. So that's encouraging. Turning perhaps to the UK, all eyes will be on Wednesday's autumn budget. Expectations are for a modest increase in spending, particularly for government department areas, and therefore we'll likely see an increase in taxes. Expectations are for that to come through the national insurance at a corporate level, but we'll also expect some higher investments also to come through. So it will be a real mix, and we're expecting that the government not to release too much spending commitments given the risks that may mean in terms of greater borrowing, and that the markets may not take that well, and would expect to see greater volatility within sterling but also within UK gilts if spending is far greater than initially thought. But we'll keep you up to speed on all those developments. Also important for this week will be corporate earnings. We'll get the major US technology companies reporting. They've been performing exceptionally well year to date, and therefore they have to really come through on the earnings front. So we'll get data from the likes of Amazon, Apple, Meta, Google. All the major players will be reporting. So we'll be looking for trends around artificial intelligence, whether demand continues to be robust, but also wider economic indicators that will come through in the earnings results. That's everything from us today. We'll keep you up to speed throughout the course of the week, and thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.